Hey, welcome back everyone. It is time for another red hot covered call video. Hey, look, we're deep into December and I'll tell you what, it's not looking good for me to reach my $55,000 mark. Man, I have been so busy and I'll tell you, I don't have enough trades on the books right now to get it done. So we're looking at that percentage gain number, and that is what I'm going to look at and take that as a win. Last year we did 24.7%. We're probably going to get to 22% this year. I'll tell you what, loving that we can have an investment strategy where I could tell somebody I did not meet my goals, yet I still made over 22%. Man, that is a win-win situation. I love it. Now look, what we're doing is this. We are talking about why we would buy back an option. Last week I talked about how I did 2 option trades. I bought ROKU, I wrote the covered call. At the same time, I sold a cash secure put, pocketing some 11 points in premium. And I was feeling good about that. Well, now ROKU has turned negative and I find myself in a bad spot. Now I bought back that call option, but today we're going to talk about why I did that and what I'm thinking, right? I show you my trades, we talk about them, so maybe you learn something. Now you may not have bought back this call option, but I'm going to explain why I do. Now look, before we get going, if you have not signed up for the free newsletter, I sent that out last week. And I'll tell you what, everybody loves the free exclusive video I put in those newsletters. I want you to check it out. What I'm going to do is, later today, I'm going to go to that list and I'm going to send out the newsletter to all that weren't signed up last week. And in that newsletter, there's a special offer just for you that are interested in the upgraded CTP dashboard. Now, okay, let's go ahead and get to this. I want to make a couple announcements. You know what's coming. I'm going to have my year-end review video. Love doing the year-end review video where we talk about what I made, how I made it, all the trades, and I share with you my most memorable trade and we talk about it. Remember last year I talked about win? Well, this year I have another one, and I'll tell you what, absolutely gets me excited to do the year-end results. Love showing you my numbers. I show you my numbers not to brag and boast, rather instead to motivate and inspire you to get off the bench and get in the game. Man, the stock market's hitting all-time highs, and I'll tell you, earnings are going to be good for a lot of these companies as the China trade war news is coming out positive. Man, I think the markets could trade sideways to higher next year. Man, you don't want to miss out. But look, they don't pay me to make predictions. I'm in this game just like you. But you have to get in the game to get your experience, and maybe you'll have the same success I am. Now look, if you like what you're hearing and you want to be a part of it, all you have to do is subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now what we're doing is this. Over the past 3 years, I have been able to generate, with covered calls and cash secure puts and stock appreciation with those covered calls, over 161,000. This is an unbelievable story for me because it wasn't but 3 years ago that I was a losing swing trader, day trader. And then my mentor Jerry sat me down, showed me the way, and look at the success I'm having. I mean, this year it's 22%, last year 24%, and the year before was 18%. Man, I'm telling you, 3 years ago, I had 0%. Man, I was losing all the time. So for me, I'm the biggest advocate for the selling premium strategy because we can win so many ways when we sell premium. Now, we're going to talk about that going into 2020, and we're really going to get down to the basics in 2020 because there's a lot of retirees out there that want to be able to make income in retirement, and the only way they can do that, whether it be health reasons or location reasons or maybe lack of skill reasons, getting jobs, they're going to have to use their portfolio. Maybe they chisel off a little bit of their portfolio to generate extra income. How do we do that? We do that selling premium. But the only way we do that is if you get your experience, right? You got to get your financial education so you get that experience so this becomes comfortable. And when it becomes comfortable, you'll probably do it. Well, that's what I'm motivating you to do. That is the actionable task going forward into 2020. Look, if you want to be in the game, then you have to open up that small ball account. You have to get your experience, right? I always tell you to do that one easy trade. Maybe it's 100 shares of one of the most conservative S&P type company. And even if you make pennies on the dollar from the trade, does not matter. It's that experience, man. You will feel the trade. And when you feel it, you own it. And I'll tell you, it's addictive. That's what it is. And you can see from my numbers, it blows my mind how I can make 21%. Yes, the S&P 500 is up 28% this year. But remember, It was down 12% last year. So for all those buy and hold players that constantly hit up my inbox saying, look, you could have made X with X, but you did this and that. Hey, look, what I'm going to tell you is this. Right now, we have volatile stock markets. The numbers are so big, and Wall Street takes profits in pennies. They don't hold on to stocks anymore, man. And if there's any hint of uncertainty in the markets, man, they sell it off. So we are going to have huge upswings. 2 years ago, the markets were up 20+%. Then it was down 12%. This year, it's up 20+%. So you're getting these huge non-historical swings in the S&P 500. What I'd rather do is navigate those waters, right? Nice and easy, doing that very comfortable covered call. We make our max gain. We move on to the next trade. I'll tell you, we do it automatically so it becomes so comfortable we can just rely on it. Now, with that said, there's risk in everything. That's why I always tell you, get your financial education and understand what you're doing, right? We don't do this willy-nilly. Now, let's talk about my ROKU trade. Last week we talked about how ROKU had fallen off some 23%. I felt like that was a great opportunity to buy because the very next day it had rallied some $7 and $8. Man, I'm feeling good. I wrote that topside covered call of 150, got $6 for it, and I also wrote that cash secure put. Right? 135 cash secure put, I ended up getting $5.60. So I'm sort of splitting the difference, right? If ROKU goes higher, the cash secure put goes away. I pocket that, have my shares taken away on the top side with the premium. Man, I'm knocking down some serious money. If ROKU turns around and falls, I'm able to buy back that covered call. Hopefully it doesn't fall below 135, which was my cash secure put trade. And man, I can keep both of those premiums. We move on. Now, with that said, it is all going to hell in a handbasket because look what has happened. ROKU has rallied up near 150. Life was good. Now it has fallen way below the 143 stock purchase price I made. We're trading at 132, below my cash secure put trade of 135. So all of a sudden, I'm in damage control. Now, how do I deal with it? I deal with this understanding what I'm doing. I understand that I'm going to do a couple things if the stock moves one way or the other. And this is where we get to that point, buying back an option. Why we buy back an option. I know some of you are saying, man, it's taken 8 minutes for you to get into this video. Come on. Well, look, this is my opportunity to really try to motivate and inspire you folks. So that is my time. Now is your time. So what happened this week is this. As ROKU is falling, and quite frankly, the markets are going higher and ROKU is peeling off. So ROKU is one of those stocks that blows my mind because the markets could go down and ROKU will go up. I just don't get it. I told you what my plan was. If ROKU were to start to fall, I was going to buy back that $6 cover call option. And that's exactly what I did. When ROKU got down to that 132 number, this $6 call option fell to about $1.50. Well, this is how I see it, okay? ROKU has fallen pretty steady the past 3 days. So for me, I'm looking at it like, okay, I got $6 premium. Right now, the stock's trading for $1.50. Usually within the first week or two of a 30-day trade, if my premium falls 50%, meaning this $6 falls to $3, I look to buy it back and wait for a couple green days. Because what I'm looking to do is to buy back that obligation, but more importantly, take that premium profit off the board. Now you're saying, there's no premium profit there, dude. You're down seriously on the stock. Don't focus on the stock right here. I'm going to hold ROKU regardless. Focus on the premium. That premium was $6. Now it's $1.50. Think about this. The premium has fallen from $6 to $1.50. I'm holding this risk of ROKU to make an additional $1.50. So for me, I'm looking at it like this. I'm going to go ahead and buy back this obligation so nobody can take my shares at $1.50. Now, I know a lot of you will not buy back your options. You'll let them go to expiration. But I've told you many stories about how Chevron has moved, and I'm going to use that example right here again. See, this is my thinking. I take this obligation off the board, and with ROKU falling the past couple days, we might get a green day or two. So what I'll be able to do is hopefully sell another covered call during the same expiration and picking up a little bit more premium. See, I've been able to take $4.50 of this $6 and put it in my wallet. That's 4.5 points. That has reduced my cost basis by 4.5 points. Remember, I bought the shares at 143X. Now I pocket $4.50. That technically reduces my cost basis. So the stock's trading at 132. What's my cost basis now? 139? What I'm looking to do now, I'm looking to see if Roku can get a base here and hit a little bit higher. And once we get above that 139 mark, we can then write that next out of the money strike. Now again, for me, it's playing the game. You have to understand where I come from. See, I look to pick up little crumbs. I'm going to own Roku regardless. And I'm going to play Roku. Now I have my exit strategies in place. So if I write a covered call right now on Roku, under my stock purchase price, I have the skills and experience to play that trade. Chances are I might have to buy that option back, adding to my cost base. It's very important to have our exit strategies in place. Now, that's how I'm going to play that. But the reason I buy this option back, and this is the real meat of this video, the reason I buy this back is because when I made this trade as Roku was heading to 150, I pocketed $6 in premium. Now as Roku is falling, that premium has fallen to $1.50. So I pay back $1.50. I keep the difference between the original premium and now the 150. So I pocket $4.50. That goes in the wallet. Well, the reason I buy that back is because if Roku starts to move higher again, or we get some news, I'm going to be able to double dip. See, if I get a couple green days, Roku is going to get back above my original stock purchase price of 143X, and I'm going to be able to then write that 150 covered call for $6 again. So I'm going to do a double in the same time frame. Or I might even extend the expiration another week or two and collect even more. Now, I know some of you are saying, look, that is pie in the sky, and that hasn't happened. Roku could actually fall. I get it, but I'm only buying back for $1.50 here. I've alleviated the obligation. I can only make $1.50 going forward if Roku were to stay sideways and not reach 150. So I'm going to take it off the board in hopes that Roku can get a couple green days and head higher. Now, I'm going to give you that Chevron example again. What happened with Chevron that made me adopt this kind of strategy? I wrote a covered call on Chevron where the stock was trading at 124. I wrote that 127 out of the money covered call. I got paid $3 for it. Chevron started to head higher and got some bad news. That $3 option got down to 10 cents. And back in the day, 10 cents or below, you could buy back your options for nothing on Fidelity. Well, I bought the option back, alleviating the obligation, but there was still time on that option. I bought it back, and literally the next day, the stock rocketed some 8 points. That same option that I got paid $3 for was trading higher. Well, I had alleviated the obligation by buying it back for 10 cents. So when the stock's trading up here, I then wrote that next covered call. I think I wrote the 129X. I ended up getting $3 for that. By alleviating that obligation, I had the opportunity to do it again. And that's what I did. Now look, Roku may or may not go higher. But what's important here to understand is this. When we place a covered call trade, we don't actually have to sit on our hands and wait for that expiration date to come to do something. I always love to buy back my options, alleviating that obligation, play the game for a couple green days, and write another one. I tell you, it keeps it exciting for me, and I think if you start to learn your exit strategies and get comfortable with this, I think you'll find that you'll do the same. Alleviate that obligation, so maybe if the stock moves higher, you'll then be able to write the same covered call in the same period and maybe do a twofer in 1 month. Now, what am I going to do with Roku now trading at 132? I'm sort of stuck, right? I own the shares at 143X. The stock has fallen way below my stock purchase price. It's down some $11. So now I have to manage this trade. I have to be cautious when I write my next covered call because chances are it might be under my stock purchase price. Now, on the cash secure put side, it's already in the money, right? My cash secure put was set at 135. The stock's now trading at 132X. It is in the money, and anybody right now can assign me those shares. Well, what I'm hoping for is we get closer to expiration, the stock is trading sideways, the $5.60 option I got paid starts to trade closer to real money, and hopefully the stock isn't below $5.60 or in the 120s, right? And I might be able to buy that obligation back cheaper and alleviate the trade. We move on. But the most optimal trade, of course, Roku turns around, heads higher. I'm able to keep all of that $5.60 on the cash secure put trade. Then I'm able to write a covered call, collect some more premium, and we make it a green trade. Now, hey, look, I'm going to leave it right there. We are going to talk more and more and more about buying our options back, playing the game so we can alleviate the obligation, allowing us to write more covered calls, collecting more credits, picking up crumbs after crumbs. Man, I call it my cash printing machine. Now look, if you're interested in the upgraded CTP dashboard and what we're doing over there, I want you to go to CTP dashboard/join. I'll tell you what, absolutely getting great feedback, and that's important, right? I just released this about a couple weeks ago, and it is so fun to get all the great feedback. As we get into 2020, we're really going to start focusing on some of those great stocks on the CTP dashboard and the ETF dashboard. So many opportunities out there. We just have to have all those great opportunities in one place, and we can keep those numbers in front of. I'll tell you what, I absolutely love it, and I love that many of you out there are having the same success I am. Now I'm going to leave it right there. My next video is probably the year in review video. Hey, look, if we do not talk from here to then, I want to wish you all a very Merry Christmas, and look, have a very safe Happy New Year. But more importantly, you have an actionable task. Start banging the YouTube videos, learning the strategy, getting your financial education. Open up that small ball account. Deposit some money. Be ready for 2020. 2020 is shaping up to be a very interesting year. It could be very volatile. It could be smooth sailing. We need to be ready, and we will be ready. I just want you in the game. Hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And until next time, may all your covered calls be profitable.